It's Brian Preston, the money guy.
All right, Brian, what about this lie that we've heard? Crypto is the safest way to store wealth. We've already talked about it not being easy because of the volatility that is inherent inside of crypto, but is it a really safe way to store wealth? Meaning, are there strategies that are proven that will absolutely catapult your financial wealth building? Let's see what some of our internet friends had to say about this.
About to buy $1 million home for half the price. The thing is, you can only do this if you know how to utilize cryptocurrency. So this is the house that I'm gonna buy, and it costs about 1.4 million. So I'll have to pay around $7,000 a month. But for this entire house, the total that I need to pay is 740K. It's because of crypto. For the down payment, I'll have to pay about 20%, which is 290K. With the remaining 450K, I'm gonna put that into the Anchor protocol. Once I deposit the 450K, it'll yield me 19% per year. That's 88 grand a year. I'll divide that by 12 months, and that's gonna make me 7.3K a month. Just enough to cover the monthly cost of this mansion. After it's paid off, I'll have a $1.4 million home, plus be making 7.3K a month doing nothing. If you wanna learn more about crypto, check out my bio.
Oh man, there's so much to take apart here. First of all,
how did we not think of that? How did we not? How did the Money Guy show?
Well, this is how the siren songs are planted, and the fact that we know cash doesn't pay anything right now. You're lucky if you get 0.5% through one of the online savings banks. So, and I've had even clients reach out to me because there's all kind of providers that'll say, "I will pay you 12% or more." He was touting 19.5%. You're like, man, none of my cash investments are doing this. Is a great way. What a great way to build wealth without a ton of risk. But I got to tell you guys, we're going to go through some of the fine print on this, but just your spidey senses ought to be triggering a little bit, because when he says, hey, at the end of this, when it's all paid off, I'm going to have $1.5 million house and plus $8,000 a month coming in. What could go wrong with this? And I'm sitting there going, well, I can tell you how this can go wrong. Is it that $290,000 down payment could be evaporated while you're still on the hook with the bank for the $1.5 million house. It's going to blow up your credit and everything else. This could be just devastating to your financial life, but there's more to this. I want to focus on not this crazy scheme that he's figured out. First of all, good luck. I was about to say cockamamie. Good luck getting a bank to do this loan for you. But let's go a little deeper. Let's talk more about some of the stuff we've seen with BlockFi and the other providers, where they're essentially touting themselves as an alternative to your online savings accounts and your money markets as a way to maximize the interest rates you can make on your liquidity.
Yeah, so the first thing is they are regulated different. This is not like a high yield, FDIC insured, safe account. This is from a cease and desist order issued by the state of New Jersey. What this shows is it says that when you sign up, when you use one of these accounts, you are granting BlockFi the right, without further notice to you, to hold the crypto held in your account in their name or in another name, and to pledge, repledge, hypothecate, rehypothecate, sell, lend, or otherwise transfer investors any amount of such currency separately or with other property with all attendant rights of ownership for any period of time, so on and so on and so on and so on.
You highlighted some things that just popped up on the screen. They get essentially to use your cryptocurrency like it's their cryptocurrency, and there's no time limits. There's no limits to what they can do with it. There's no ramifications to it. Yeah, I can see why states like Kentucky, New Jersey, and others went after BlockFi. There's actually a lot of this has been in the news because there's actually some settlements that have been reached on this, where BlockFi is going to have to restructure a lot of how they're presenting this, because it needs to be more transparent. Because I've realized people they don't read the terms of a contract or terms of service. They just click on through and like, gimme. Bring the 19% in, bring the 12% in. You really ought to read the fine print.
And you can imagine if you're using this as your emergency fund, as your cash reserves, but the institution holding it has these kinds of rights, there are some major risks with that money actually being there for you when you need it. Having access to liquidity inside of a merchant account is an absolute necessity. And I just don't know that crypto providers presently provide the level of liquidity that emergency reserves should have.
If you're really curious about this, Daniel did a great deep dive on it on his FYI by FTE.
Yep.
I'm talking, you're going to get we're going deep with the knowledge on this and the research that Daniel did. You can go a little deeper in some of those excerpts that we just read.